Dear student, this is Shailesh Devidas Janbandhu, Assistant Professor from Department of Become Computer Application, GS College of Commerce, Wardha. And our today's topic is types of accounts. For using Tally, we should know which type of accounts we use, what are the rules for the accounts. So we discuss about that particular topic. Okay, so types of account in broad way we have two types of accounts only, that is personal and impersonal. Personal and impersonal. These are two types of accounts which are available in accounting. The impersonal type has again two types, that is real account and nominal account. Real account and nominal account. So we have two types of account, that is personal account and impersonal account. And impersonal account has two types, real account and nominal accounts. Before discussing these accounts, we should know all transactions are related with these all three types of accounts. Personal, just like when we use any name, firm, bank or any other name which are available in our transactions, it would be a natural or artificial. So we have two types of persons, that is natural and artificial. Natural and artificial. So the personal account or the types personal means which combine or which connect with the persons, the firms, the financial institutions, where some persons have a natural existence or artificial existence. Natural existence means which one is take a birth or human tendency, which have a human tendency, and artificial is called which can be established by a law or governed by any type of law, just like Company Act, Partnership Act. By this way or by these acts, a company or a partnership can be established. Therefore, it has a artificial nature, means natural and artificial nature. So all these types of accounts, related accounts, are using personal accounts. For the personal account, we have a rule for making the transactions, and that rule is called as a golden rule for personal account. The rule is debit the receiver and credit the giver. Debit the receiver and credit the giver. Both debit and credit cannot include in a one transaction, because someone given and someone taken. So who accept the goods or any type of material or any type of commodities in our transactions, it always be debited, and who receive it or who give it is always a credit. Okay, so if we provide the transactions about the personal account, just like we paid to some particular person or paid to some particular person, money paid to some particular person, that time some values are provided to that person and we give it. So we are the giver and the other person is a receiver. So receiver always should be debited. Okay, so just like, for example, paid rupees 20,000 to Shyam. Paid rupees 20,000 to Shyam. So Shyam is a receiver. So Shyam is a receiver, and receiver always be debited. So Shyam account debit, and we give the money to the Shyam, so we are the giver, and giver always be credited. So to cash account. Normally cash account is a real account. We take another way. So to cash account 20,000. Okay. So Shyam is a receiver. So Shyam is debited to cash account. Same way, received rupees 10,000 from Mr. Ajay. Received rupees 10,000 from Mr. Ajay. Here Ajay is giver. Here Ajay is giver. So giver always be credited. So cash account debit. Who is the giver? Ajay is the giver. So to Ajay account rupees 10,000 debit side, 10,000 credit side. Means when the transactions contain the name of person, name of institution, name of any financial institutions, that time this type of accounts are called as a personal account. And person can be a natural person or artificial person. Natural who take a birth, and artificial who established by some law or governed by a law. These two examples explain who is a giver and who is a receiver. When we paid someone with a name, that time he is a receiver. And when we received from some particular person, that time he is a giver. So two examples which can explain the personal account and the rule of personal account. Now second one and second type is called as a impersonal, where some existing or physical existing accounts are available. Just like first one is a real account, which is related or always related with the assets. Okay, when we purchase some assets or sell some assets, that time any type of transactions which related with the assets are included in the real account, or all types of accounts which can be called as asset is included in real account. So the rule for the real account, debit what comes in, debit what comes into the business, and credit what goes out from the business. What comes into the business? Anything which is come into the business will always be debited, and any type of asset or any type of account which goes from our business, goes out from our business, is always be credited. So the example for that, just like real account are related with the assets. Just like we purchase some machinery. We purchase some machinery. Just like purchase machinery of rupees 5,000. Of rupees 5,000. In this transaction, we purchase a machinery at cost rupees 5,000. Here machinery is a asset, so it is related with the real account. When we purchase some machinery, that time seller will provide the machinery to provide the machinery to ourselves or into our business. So when we purchase machinery, that time the machinery will comes into the business. So the machinery should be come into the business, so it is always be debited. Like machinery account debit. For that purchasing the machinery, we should pay something to that seller. We should pay something to that seller. So the cash will goes out from our business. So credit goes out from the business. So cash goes out from the business. So to cash account. To cash account rupees 5,000. Rupees 5,000. So when we purchase a machinery will comes into the business. Machinery is nothing but a real account type because it is a asset. And for purchasing machinery, when we purchase a machinery, it comes into the business, so it should be debited. To purchase a machinery, we should pay some cash to the seller. So from our business, cash goes out. So what goes out from the business is converted into credit. So machinery account debit 5,000 and cash goes from the business. So to cash account rupees 5,000. Second example, just like we purchase a machinery, that time we have the machinery comes into the business. Sometime the machinery or scrap or anything we can be sold, or the asset would be sold. That time the machinery or the asset goes from our business. Okay, so that time what type of the changes made in the transactions? Just like sold machinery of rupees 3,000. Sold machinery of rupees 3,000. Now machinery will be sold, so machinery goes out from the business. And when we sold something, we get a cash. So cash comes in a business. So whatever comes in business should be debited. So cash account debit. And what goes out? The machinery goes out from the business. So to machinery account of rupees 3,000. So when we purchase a asset, that time that asset comes in business, and in against that purchase we should pay the cash. So machinery comes in business, cash goes out from the business. So machinery account debit to cash account. When the transaction is reversed, means when we sell some asset to another person, that time that asset would be goes out from the business. Therefore, it should be credited, and that time we get a cash from that particular purchaser. So cash that comes in a business. So cash account debit to machinery account. Okay, so we discuss about the personal account, which is related with the persons, institutions, firms. Then real account, which is related with the assets. Now nominal account. Nominal account are related with expenses and income, or nominal always will be related to expenses and incomes. And the rule for nominal account is debit all the expenses and losses and credit all the income and gain. So debit all expenses or losses and credit all income and gains. Credit all income and gains. For example, wages paid rupees 1000. Wages paid rupees 1000. Here wages is the expenses. Wages is the expenses, and in against the wages we should pay cash to the laborers. So cash means when we paid something or paid expenses, that time it is always conducted with the cash. Means when we paid something, paid expenses, paid any salary, paid any type of electric bill, paid commissions, all these are expenses, and when we paid that expenses, it always be debited. Means any type of expenses is always debited. So the transactions for the journal entry for the transactions, wages paid rupees 1000 is wages, because wages is a expense. So wages account debit, and always conducted with the real account, and that real account is called as a cash. So to cash account of rupees 1000 debit side, 1000 credit side. Same way, when we transact with the incomes, that time rent received rupees 2000. Here, if we have only rent, that considered as a expenses, but when the transaction contains the received keyword or word, that time it become a income. Means rent received means here we have take a income in a business. So income always be credited, and here also when we receive something, it would be in a form of cash. So what comes in according to real account, what comes in, anything comes into the business will always be debited. So cash account debit, and all the incomes and gains should be credited according to the nominal account. So to rent received account of rupees 2000. So this way we explain the expenses and incomes. expenses and incomes. So we have two types of accounts, that is personal account and impersonal account. In personal account we have two types of persons, that is natural and artificial. In impersonal we have two types of account, that is real account and nominal account. Personal account related with the persons, firms, institutions. Real account related with the assets, and nominal account always related with the expenses and incomes. The rules for these three accounts: personal, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all the expenses or losses, credit all the income and gain. Thank you for the day.